Hi friends, Simit here from InformedTrades.com. Today is Thursday, May 29th, 2014. Time for our daily Forex chart review. Basically, in these sessions each day, I share the trades I'm placing, adjustments to existing positions that I have on in the markets, all as a part of helping traders learn. You can learn from my successes, learn from my mistakes. We can all learn together. A lot of the information, I'll just be sharing the trades that I'm placing and the logic behind them. However, I may be using jargon that you're unfamiliar with, terminology that's foreign to you. If any of that holds true, you can visit InformedTrades.com. We have a lot of information, a lot of articles and videos to help traders learn. You can share your knowledge, ask questions, not only knowledge on the style of trading that I employ, price action trading in the Forex market, but on many other styles of trading, covering many other markets. Check it out. Register as a member. Share your knowledge. Ask questions. Set up a practice account. Lots of things you can do there. Okay, let's get started with a look at the charts. Okay, here right now is a chart of gold, and we had been watching this for the past 2 months. It had been in this box here. We have now broken down out of this box. And I had mentioned that this was a key battleground between the Bears and Bulls, and if we broke out south, which we have, that we could go all the way down here to 1180, and I still think that is true. In fact, I would consider that to be the most likely technical target. I won't be shorting this pair, but I think it might make sense in some respects to look for a short opportunity here. It's not entry level. These charts I'm using are tradingview.com. Excellent charts. I really recommend them. Saved me a lot of time, helped my analysis. But yeah, this is the situation. Personally, I'm looking for, I don't like to enter when you're in the midst of a whole bunch of red candles. I like to let the bleeding stop and see when the market is showing natural signs of reversal. It may happen right around here, 1230. There's going to be a resistance level, or excuse me, a support level right around here, around 1225, 1230. That might be a level where the market sort of pauses. It might be a buying opportunity if you're bullish. Of course, 1180 is what I think would be a really good buying opportunity. But of course, I'm coming from the perspective of fundamentals. I'm happy to hold this gold position for quite some time. So I'm not concerned too much with this price action, and I'm looking forward to it as a buying opportunity. That is gold. Now let's go to the Forex trades that I have on at the moment, which are much more short-term based. Most of my Forex trades I hold on for a couple weeks or a couple days. Let's see. Excuse me. Okay, I have 4 positions on at the moment, and all of them are at break even, so that's good. My account has been completely de-risked. Let's go to Aussie yen to start off. I had a couple orders on the Australian dollar, and that worked out well. I had, posited that we were in. Well, there were a number of signs here on Aussie yen. We have hammer off support, so we see a pretty clear uptrend. Let's actually. Okay, so let's zoom out actually a little more. Okay, to me this was enough, sufficiently bullish enough. Price was between the 50 and 200 exponential moving averages. However, the moving averages were sloping upwards. We do have a bit of a pattern of higher lows here. So I thought it was sufficiently bullish to make it the trend even more bullish. You'd want to see price above the 50 simple moving average, but to me this was sufficient. We pulled back to a major Fibonacci retracement level right around here, right between actually the 50 and 61.8% levels. So basically, whenever there's at least a 50% pullback from a swing low, from this low here to this high. So the market went from this low to this high when we see a huge run up very fast. And then we gave back more than half of that gain. So when we give that pullback, that's a cue for me to look for a buying out sign. Price was also at this horizontal support level going back to September of 2013. And it was also, that level was also sort of confirmed in March of 2007. In addition to price pulling back there, we had the 200 exponential moving average, and we see a hammer candlesticks. Moving average, more than 50% of a pullback has occurred. from a swing low to swing high. Well, all those were signs that left me being comfortable to enter. I thought those were all bullish signs, especially the hammer. That's the icing on the cake. Price then closed above this resistance level here at 94.33. So I moved my stop to break even. And that has already been done, so I can move that up here. Okay, so that's Aussie yen. Now, yesterday, that was filled a couple days ago. Yesterday, my Aussie dollar position got filled. Okay, and this got filled really well because price just touched my entry and reversed almost immediately. So this position had almost no time at a floating loss, which is nice. You know, minimal pain. We're going off a trend line here. We also have the 50 simple and 200 exponential moving average right in this vicinity. And what I thought was really interesting is we have a slew of narrow candles here, right, or small range candles. So to me, that signals potential accumulation. I blogged about this before. You know, whenever you see a range like this, it suggests the potential that either buyers are quietly accumulating or sellers are quietly distributing. The price is going to fall. Either way, you're expecting a breakout of this range. I was thinking that it'd be a breakout to the upside based on the overall trend lines here. That turned out to work. That was, or so far so good. Let's see. But I take it back. This one has not. I have not moved my stop to break even on this trade yet. You see, it needs to close at or above that orange line, that resistance level I've identified at 93.02. So that is one trade that has not been de-risked, but so far so good on that. So that's Aussie dollar. Canada Swiss now. Okay, getting closer to my target profit. This trade has been de-risked. I took half off right here on May 9th. I've been in this trade for over a month now. That's fine, and we're getting close to the profits target. So nothing to do but just sit here and wait. That's Canada Swiss. Now, dollar Canada. Okay, we are also dollar Canada, and this trade has been de-risked, so I should move this down here. Okay, and this one I may have de-risked this trade a little prematurely. I'm still fine-tuning the level of the time at which I move to break even. But basically, you know, it's a very similar situation. We're in a downtrend here. You know, we have a pattern of lower highs, prices below the 50 simple moving average, and the moving average is sloping downward. So I thought those are all bullish signs, sufficiently bullish or bearish signs. Then from this swing high to this swing low, we have the 50% pullback right at this level here, 109.25. Price reached that and formed a reversal candlestick there, which is also a support level going back to here, February 18th, and here, January 16th. So we had all those signs that I like to see. I entered short. It worked well. However, we are stalling a little bit at this resistance level here. So I moved to break even just in case we don't make it. We start to reverse back up. I will not lose any money if my stop gets hit here. My profit target is still down here. I would, of course, like to see price continue moving down to this level. Okay, so that's the 4 trades I have on, 3 of which have been de-risked. Now, the one order I put on today that has not gotten filled yet is pound dollar. Okay, so pound dollar, let's actually zoom in a little bit. One, we see an uptrend. You know, price has a pattern of higher lows. And you know, the how these trend lines are drawn is a bit subjective. You know, for instance, I could have, if I had moved this trend line, if I move it down so that it goes through this low of the candle, then you have a slightly different trend line. But I think this trend line is of some value. It's reasonably accurate. We're basically somewhere around here, maybe it's a little lower, is the bottom of that trend line. And at the same time, let me just illustrate. Oh, it's a little difficult to see. Let me actually remove. I denoted where I'd be entering at. Let me actually just remove that text. Okay, so I'm entering at that black line, this black line right here, and you can see we have a doji candle right at this black line, which is also, there's that trend line. You know, it has been touched. One, two, you can argue there's a trend line going on here as well, at that level as well. It's near the 50 simple moving average. Price is clearly in an uptrend here. So all those signs, I thought it'd be a good buying opportunity. I have my stop between support levels here. My stop is at 66.25. I'm entering at 66.85. My target profit is the all-time highs here, or not the all. I don't think it's the all-time highs. No, it's not. The highs here at 69.85. The recent highs here, going back to May 6th. So basically, I'm looking to gain 300 pips, and I'm risking 60, which gives me a reward risk of exactly 5 to 1. So we'll see if this order gets filled. Right now, we are about 30 pips above the order fill. So if the price falls 30 pips, that'll get the order filled. That's about it for the trades I have on at the moment. Any questions you have, anything you want to add, join us at InformedTrades.com. Best of luck in your trading, and we will see you tomorrow. Take care.